Hello dear subscribers. Today's video is about the most important topic, the break-even point, which 90% of all traders have not yet reached. I will show you exactly which points you have to pay attention to in order to reach this break-even point as efficiently and quickly as possible. With my approach and a subsequent strategic analysis, you don't lose more than 160 euros. For this purpose, I will present you practical results from a trading beginner who started trading as a part-time scalper only a few weeks ago. Very interesting findings come to light that can save you a lot of money in the future. I know countless traders who have lost many thousands of euros in trading. As a part-time trader, they often use strategies that are only suitable for day traders. We have already noticed that a part-time trader can only be active as a swing trader or scalper due to the time. The break-even point is the most important factor as only 10% of all traders reach it. This break-even point can be reached within 6,000 hours or 6,000 trades with certain conditions. Since a trader only loses at the beginning from the perspective of probability, he should first concentrate on limiting losses. He achieves this with a small number of lot and small stops. Once he has reached his break-even point, he can focus on maximizing his profits by scaling. In practice, it usually works the other way around. A mathematical law also helps us with this. The law of large numbers is a limit theorem from probability that helps us in trading. In the simplest case, it describes that the relative frequency of a random event approaches the theoretical probability of this event if the random experiment is only carried out often enough. This means that we can use the sample mean to estimate the expected value of random variables well. The following applies: the larger the sample size, the more precise our expected value becomes. A large sample is therefore an important requirement so that you can make reliable estimates about your future expected value. And now I'll show you how we can increase the number of our trades. Here we see an M1 chart in Eurist with different zigzag lines within 80 minutes. A day trader, indicated by the red line, can trade 2 movements during this time. A minute scalper can do 16 movements and a second scalper can do 34 movements. What is the difference between a minute and a second scalper? The second scalper can also be in the market for a few minutes, but usually ends its trades earlier than the minute scalper. This means that in this example, a day trader has an entry opportunity every 40 minutes on average, the minute scalper every 5 minutes and the second scalper after 2.5 minutes, which results in the second scalper 48 chances within 2 hours and even 96 entry chances in 4 hours. As a rule, however, he will not use this completely. Now let's take a look at how long it takes a beginner to break even. A day trader has 4 hours a day, trades 250 days a year, carries out 4 trades per day, that's 1,000 per year. That would take him 6 years and 6,000 hours to break even. If he doubled the number of trades per day, he would cut the time in half. A minute scalper who trades 2 hours a day on 200 days creates 1,500 trades per year, and is already at break even after 4 years with 1,600 hours of experience. With twice the number of trades, he already achieved the goal after 2 years. The reason why a scalper can break even after 1,600 hours is simply the experience of the many different trades. The second scalper comes to the same result here, but is able to significantly increase the number of trades again, and thus shorten the time to 1 year. We will see in practice later whether this number of trades is actually possible. In order to break even within a year, a few prerequisites are necessary. First, the spread should be cheap, the stop is 1.5 pip and the TP is 3 pip. We trade with the smallest lot size, and that is only possible in the Forex market. In addition, for our trading decisions we need real stock exchange data, a special screen structure, a high-quality workstation and stock exchange software that is specially filtered and tailored to second scalping. There is also a clear strategy. In the area of technical analysis, I work exclusively with limit orders. My self-developed Bionic Candle supports me in chart technology, the strength of market and limit orders support me in algorithm analysis, the currency strength of the euro or dollar give me important fundamental data, and my special sound analysis helps me get in and out. In practice it sounds like this. By the way, in the end the complicated thing is not reading out the charts, but programming the filter settings. In my last video, I already described the 7 phases to success, with the aim of achieving the main occupation in phase 7 and earning a net income of €3,000 per month from it. Today we're going to look at exactly those 3 phases to break even. In the first phase we calculate a loss for the first 2,000 trades with an expected value of -5 cents per trade. In the second phase the expected value is 3 cents per trade, and in the third phase we want to break even. Let's take a closer look at this process. In phase 1A we calculate the first 666 trades with an expected value of -7 cents per trade. In phase 1B we calculate 668 trades with -5 cents per trade, and in phase 1C we expect 666 trades with 3 cents per trade. So the result after 2,000 trades is a loss of €100. Phase 2A has an expected value of -5 cents. Why is it higher than in phase 1C? The beginner should have the chance to achieve his goals without having too much pressure. Phase 2B at -3 cents and phase 2C at -1 cents. The result after the completed phase 2 is a loss of €60. The total loss is €160. The last phase 3 begins with an expected value of -3 cents, after which we reach the break-even point and at the end even get a little profit. However, the overall result is 0 because we had to make up for the previous loss. Then we can deal with scaling and profit maximization. The big question is, how do we get to the break-even point as quickly as possible? The answer is, with clear, traceable controls. Here you can see already known control factors that show you your current status in trading. I have added 10 important points to this that I have developed for myself over the years. We'll go into that in a moment. In my last video I reported that in over 100 hours I shared my strategy with a good friend. He now has the same elaborate technology and equipment as me. However, he does not yet have the same experience as he is still an absolute beginner in scalping. In 15 trading days he has now completed 705 trades, during which he had also a week of vacation. From his point of view, as a part-time trader, in the evening from 4 p.m. to 8 p.m. are 30 trades possible. Now let's take a closer look at his result of the 705 trades. On the short side, he traded 4.19 lots, of which he lost 2.97 lots. 423 short trades were completed. Positive is, the profit trades reached more pip. The gross pip value was 3.21 with the net pip value at the losses being higher. On average he was 4.3 minutes per trade in the market. Positive the winning trades ran longer than the losing trades. The CRV is 1.49 and the pip per minute ratio is 0.43. These values should be closer together. The profit quota is within the agreed framework. With a CRV of 1, the win rate would be as much as 44.2%. The expected value is -4 cents and the loss per minute is -1 cent. He lost €48 in the short trades and won €30. The total result for the short area is -€17.98. He traded less long than short. It was also significantly longer in the long trades, even though he had a smaller pip values per minute. The CRV is similar, but the pip per minute ratio is significantly better. The profit ratio in the long segment was also significantly higher, which in this case resulted in a significantly better expected value. The loss was also significantly lower here. Normally everyone would now say that they should concentrate more on the long area, but as you can see there is much higher potential in the short area. In the past he was a typical long trader in the DAX and S&P, so the shorts are a big challenge at first. Here we look at all the losers with the winners. With 6.3 minutes per trade, he has been in the market for far too long. The profit rate is better than agreed, as is the expected value. He lost €21.70, but in which area can you gain experience and complete 705 trades with so little loss? In this comparison chart you can see that he is still a bit long-oriented. Overall he won €59, lost €80, the result is €21. A loss of €49 was planned, but it has reached €22. He did very well for the first goal. Without broker costs, he would even be €13.70. That shows that he is on the right track. Since this value is below 100%, this shows that the broker has earned more than he himself. In total, the broker has earned €35.40. Now some will say, I knew it, as a scalper you pay an infinite number of broker fees. Let's take a closer look at whether that's really the case. I have an old evaluation here where I traded 80 trades in 2 days with one lot each. My result was €888, the broker earned €415. Now everyone would say the broker earns half of what you earn. First you have to know that I will get a small discount of 25%, that's €103.75. This increases my profit to €992. In this case, the broker would earn 26%, but the point of view is not yet entirely correct. My profit totaled €1,186.31, and the broker gave me an additional €103.75 discount. With that I earned a total of €1,290.06. The broker is not responsible for the loss I caused by my wrong decisions. The broker receives €311, so the effective share of the broker is 19%. From my point of view, that's okay. Of course, a day trader pays less fees because he of course also trades significantly less. But we know the higher the number of trades, the more experience we get and the faster we reach our break-even point. And in the scalping area this is much faster than in day trading. The question in the end is, do we want to cut fees or reach our profit zone faster? Let us now return to the evaluation of the scalping beginner. The minus return is 0.72%. All in all, we expect a total loss of 5% after 6,000 trades, and the risk per trade is 0.01%. This is a peak value with so less money that is only possible in the Forex market. He traded a total of 7.1 lots and 8 trades were in break-even. He clearly exceeded the target value of 100 with 228%, since the expected value was originally minus 7 cents. He invested €1 to earn 73 cents. This is absolutely great to start with. In addition, we can see some graphics that help us with the further evaluation. Of course, all executed trades are shown again individually. We see the entry time and on the left how long it took for the next trade to be completed. 297 short trades were lost, each short trade lasted an average of 2.5 minutes, and here we see how many seconds it was in the trade. Here are the data for the short winners, long losers, and long winners. The respective profit and loss, as well as the cumulative value. With this view, the individual trades can be analyzed excellently. Let us first consider the graphical evaluation of the loss trades. It is noticeable that the loss series gets smaller at the end. It is also noticeable that the profits are getting bigger and bigger, although the break-even point is the first goal. With 705 trades, my friend has only covered 12% of the way to reach his break-even point. With this table you can of course display countless evaluations in order to get to the bottom of the individual problems. But that would go beyond the scope of today. However, I would like to show you one little thing that ultimately changes the result decisively. A stop of 2 pips, including the spread, was agreed, which in the end results in a loss of 17 to 20 cents per lost trade. You can see that at the beginning the stop was enlarged and then, which became more and more dramatic in the end. Incidentally, only 1% of the stops that were made were successful, so you should generally avoid them. Now I've just made a new calculation of what it would look like if my friend hadn't enlarged his stops. Let's take a look at the result now. Here we see the graphic representation where the stops have been drawn and below what it would have looked like if the stop had been adhered to. Instead of a loss of €21.70, the loss would only be €12.45. That's a 43% difference. The CRV would improve from 1.48 to 1.67, which is over 13%. This would also improve efficiency by 13%. The decisive point, however, lies in the expected value, which would improve from -3 cents to -2 cents, that is a huge 33%. Perhaps you remember this table. An expected value of -7 cents was planned for the first 666 trades. Without following the stop, he would already have been -2 cents, and would have achieved an even better result. This is a target value that he should only reach after 3,500 trades. Based on the graphics, you can see that it is usually not worth enlarge the stop. There are 1,000 ways to achieve the goal. It is important that you know exactly where the individual sources of error lie, because only then can you do something about it. This means that with strategic money management there is a clear strategy to achieve the goal in a relaxed manner. Because we should note, if you make a mistake and don't correct it, you commit another mistake. As it stands now, my friend will reach his personal break-even point by the end of the year, and that within 6 months. His maximum loss will be €160. In the next year we will then take care of maximizing profits and gradually increase the number of lots from 0.1 to 5 lots. He would then be able to generate some €10,000 in pre-tax income in the next year. Even if it were only half of it or, in the worst case, no profit at all, he would have achieved one goal in any case, his break-even point. And that would make him one of the 10% of the best traders in the world after just 1 year. And I think that's a nice goal to get up motivated every morning. I hope that I was able to show you how important it is to analyze your trades in depth in order to draw insights for the next trading day. Only those who are aware that they have lost their way can change the path in order to achieve the goal. I will keep my fingers crossed for you that you will also achieve your goal, and if the information helps you, I will be happy if you recommend this channel to others. I wish you all the best in the future. Best regards, Michael.